Hello traders, here is Chris Capri, secondsguysforex.com. So this is a video for you guys, and it's not so much, I will get into some strategies in this one, or some strategy more of along a BR trading method. But some of you did very well in these trends, and some of you had a hard time on these trends. You know, the ones of you that were really, the traders of you that were following the with trend systems did exceptionally well. You know, especially on Euro, Aussie, and Kiwi. In fact, one of the traders went 7 for 7 and snagged over 475 pips. Others of you were thinking counter trend the whole time, or stuck in a counter trend mentality, didn't adapt with the trend, and you were getting hit at every point along the way. You know, you just kept buying and buying and buying and buying, and that just led to a disaster for you. So, you know, I want to talk about some things that you can do to deal with these environments, to understand these environments, how to anticipate these types of moves, and how you can really take advantage of them. First off, we have to understand why this move was so strong, you know, both on Kiwi, on Euro, and on Aussie. Pound had some of it, but because it had some more underlying strength, you know, it was able, and it was already up at the time, it wasn't quite as exacerbated, but it was still pretty strong along the way. And so we have to understand, you know, that along the Euro, Aussie, and Kiwi, how is it that you can recognize these situations and how can you deal with that? The first thing is this, is that if you look at Euro, you'll realize that, you know, obviously everybody knows about the situation in Greece and in Spain and the crisis and everything like that. But the bottom line is the Euro's been propped up by the Chinese. It's been propped up for a long period of time, and so with that being said, every time it hit 130, the Chinese would come in, they'd prop it back up. And that created kind of an artificial price action environment in the sense of it's very atypical for something or for a particular currency to have this much scrutiny and, you know, all these risks around it in place, but yet to have such low volatility. You know, it was stuck in a 400 pip range or less than that for 4 months now, or 5 months almost. Actually, sorry, for 4 months. So that is very unusual. So it's an artificial environment. It was even more constricted on the Aussie. You know, Aussie for a couple months had a very constrictive environment between here, and it was most constrictive on the Kiwi. Now, when you have environments like this, it is very important to understand what this does from an order flow perspective, particularly on the Kiwi and on the Euro. From an order flow perspective, to see prices stuck in such a tight range does a couple things. One, it doesn't make dealers happy, because if prices are not that volatile, then there's not that much money being made because there's less transactions. Dealers don't like that. Brokers don't like that. Banks don't like that. Nobody really likes it. There's no real direction involved, and so there's a lot less money to be made. It's also more confusing for traders as a whole when the market is less trending. So that's one thing too. But what that does is that puts a psychological pressure and on traders as a whole that, you know, they're going to wait for that big trend, and when the markets do finally move, they're going to move quite strongly because the traders are now excited that there is now a trend in place. So they're going to be really piling into it. They really don't give a, you know, shit which direction it's going. What they do care about is that there's movement and that they can make money on that. So that's the most important thing. So create that psychological pressure. But from an order flow perspective, this heavy containment that you see in these situations, you know, with the market being very tight like this along the way, creates a sort of constriction in the order flow. So this order flow constriction, that once the market releases that, then it tends to, by all this pressure being bottled up, when the markets do finally break out of this and release, then the markets tend to trend much more strongly than they normally do. A couple great examples of this in my earlier trading days. I want to show you one on EuroCAD. This was a really big one that I was watching back in my day. Even much tighter range for a long period of time, but let me show you. Might have to go a little bit further back. Yep, I'm going to have to. Give me a second, and I'll show you. Okay, this was a really big one right here. So you can see kind of this similar constriction. And you see it's obviously it was in a much tighter wide range, but then it got really coiled up here, really, really tight. So let me zoom into this. This is an incredibly tight range here. You're talking a 275 pips for Euro CAD that normally has strong volatility. This is quite low. And this did the same thing. It put that psychological pressure on traders who trade this, who weren't making any money on it, but it also put a constriction on the order flow. And look what happens once it broke out. Notice the pattern here, breakout, retest, and then launch. And so that produced quite an enormous move. I mean, this is enormous. When it finally broke out and retested, 43.45 all the way up to 5,200. So, you're talking over almost a 900 pip move. And, several inside bars and shave bars along the way. So, you have to understand that when you see these environments, as we go back to the euro dollar or the Aussie dollar, the Kiwi dollar, and look at it more recently, that this constriction will eventually lead to a very strong tight move in the market and a very strong response. So anytime in the market that you see heavy constriction, especially on a daily time frame for so long, 1 month, 2 months, 3 months, the longer it builds the better. When you see this heavy constriction and then a breakout of this range, you want to switch your mindset to kind of pull back on the counter trend strategies and start looking for with trend strategies. Switch more from guns to missiles, basically. And for every counter trend trade, if the market, you have to ask yourself, if the market's selling off 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles in a row, maybe you want to stop looking for counter trend strategies until finally a counter trend one does play out. Until that happens, keep looking for with trend strategies. How many of you, those of you that were getting hit on, trading counter trend in this, how many of you missed the inside bar setup right here? Or maybe the shave bar here? Or how about on the euro dollar? How many of you caught the inside bar strategy here? Many of you are saying, hey, I kept getting hit with counter trend strategies, but you didn't have any with trend strategies. So how can you, I understand the idea of wanting to be precise, and sticking to your trading plan, but how can you have a trading plan solely consisting of counter trend strategies? When there's two types of environments, with trend and counter trend, you have to have a balance between that. If you are going to take a counter trend strategy in that, then what you would want to do is, with the dominant trend, zoom in, say, on a 4-hour time frame, and then what you'll do is look for a micro counter trend move, perhaps the 6NT strategy, and then trade with the trend. You're just trading counter trend on the counter trend move. So that would be the way to use the counter trend strategies. Look for a micro trend, which is really a counter trend move, and then look to use your counter trend strategy on that. Maybe there's a pin bar rejection or something like that. So if you're really going to stick to only counter trend strategies, then you're going to really have to adapt it for situations like this when the market just sells off 1, 2, 3, 4, 5, 6, 7, 8, 11 out of 12 candles. But many of you are saying, wow, I had a hard time losing money the last 2 weeks. Yeah, because you were married to one side of the market. Traders, you have to be unmarried to one side of the market or the other. You cannot only trade one side of the market or only trade counter trend or only trade with trend. You have to be flexible to both. But the most important thing that you have to have allegiance to is the trend. You have to have allegiance to the trend. Those of you that were stuck on counter trend strategies this last 2 weeks got crushed. Those of you that were open to it and were paying attention to the trend and trading with the trend were making a lot of money, hand over fist. And so for those of you who are doing it, congratulations on that. And for those of you that weren't, it's not, you should be smacking yourself upside the head or anything like that. It's more of use this as a learning experience. Hey, I can learn from this. I'm going to learn from this. And this is how I'm going to, do this in the future. But anytime you see constriction or very tight environments, particularly on the daily charts, once those ranges break, then and you see that there's a lot of candles that are one direction to the other, start looking for more with trend strategies. There was a lot of money to be made on this. Again, inside bar, shave bar. So, every one of those all turned out for profit and quite a lot of profit. And it could have changed your entire trading week. It could have even balanced out some of the counter trend losses that you had. So again, the lesson from this is anytime you see, a massive amount of candles in one direction, make sure you're trading mostly with that trend as much as you possibly can. And also anytime you see the markets are very constricted, if you don't want to trade the breakout, that's fine. Once you do see the breakout happen, then start looking for with trend setups, especially when you have these tight consolidations on longer time frames. Now, in relationship to that, I really last week was just trading Aussie and Kiwi. Why? Because I like them from a price action perspective so much, but I did a lot of trading on the 1 hour time frame. And I want to show you some really good setups and some ways that you can trade this. These are simple things. These are simple price action strategies that you all could be doing that many of you should be, you should know. But some of you are still learning these, or some of you, sometimes forget these, so I'm using this as a reminder. Anytime there is a very dominant trend in place on, say, the daily time frame, you can always look for with trend setups on the 1 hour or 4 hour time frames, and they will show themselves up. And what are the key ways to do it? Look for key places where the market stops. Market stops here, particularly if it's in a downtrend. Look for places where the market stops on the downside, where it finds support. If we're in an uptrend, look for places where it finds resistance, because those will often become breakout pullback levels. Case in point, look at this one right here. 3 opportunities to get back in it. And if you zoom in, take a look. What do you see when we reject off these levels? Piercing pattern, engulfing bar, pseudo pin bar. Every single one of them gave you a reversal trigger. So what you want to do is mark your levels where in a strong downtrend we find intraday support. Maybe it does a decent pullback, but then it breaks below that again. When it breaks below that again and starts a new leg down, look for the market to return to that level. There was obviously a lot of support here at this time. This will become a roll reversal level. And so you can either look to get in on the level, but more ideal is look for a trigger off that level. We had triggers on each one. Pin bar. This one failed. Okay, fine. The market still rejects off this level, creates a piercing pattern. Okay, now I take the pullback into the piercing pattern and I get short. The market comes back to it. Pin bar. Maybe you didn't get the pullback on this one. Fine. Or maybe you get stopped out. Fine. Guess what? It gives you a second opportunity, engulfing bar. So you take that trade, boom, it works out. Same thing, pin bar rejection, another opportunity to get short. We know that the market had created a pretty good support at this level. And so look what happens then once it breaks that range again. This is kind of like a microcosm of the macrocosm that I was talking about earlier. When the prices are consolidated for so long, eventually it's going to produce a breakout, and eventually that's going to create a very strong move in the next, and once it breaks out of that, and look what happens. Very strong move. Oh, and go figure. It pulls right back to that level again, creates a pin bar trigger, gives me an entry to pull back, and there we go. Or you can almost see that on a micro level. What is this? This is a 6NT pullback. Even though we generally don't use it on the 1 hour time frame, it still has the same principle. So you see a 6NT pullback plus a pin bar, you either get in on the pullback or you get in on the break of the low here, and bam, a very nice with trend trade. So in trends like this, look, particularly in downtrends, look for places where they stop, ideally a double bottom of sorts or triple bottom. It's going to create a pullback, and that pullback is generally going to be an opportunity for the sellers to say, hey, we're going to use this as an opportunity to get back in. They're going to get back in, and they're going to continue on the trend. Look for these key breakout roll reversal levels. It's critical. Oftentimes, maybe the 1 hour 20 MA doesn't hold. Maybe that's because these little breakouts above the 20 MA are really pullbacks to the 4 hour 20 MA. Boom, 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 boom. So that is another way to get involved in these with trend opportunities. And look at the opportunities here. 6NT pullback, bam. Pin bar pulls up to the 20 MA, another pin bar with trend to get into it. Perfect. Hits a pin bar, pulls back to 20 MA, creates not quite a reversal pattern, so maybe you miss on this one. But we know there's a key level, and look what happens. Pin bar rejection off of it, off the 20 MA. You have to be using these as opportunities to get back in. Now, if the market all of a sudden comes up to this level and then breaks above the 20 MA, then we no longer look for those anymore. Maybe it won't hold this time. Maybe it will, because it'll realize, hey, it's not only to the 20 MA, but it's also good to a good support level. So maybe the sellers, if they still like it, get back in. I'm not entirely sure about this there. There is some, possibility that this is producing a real counter trend move. It's very different than this kind of Dragonfly Doji pin bar pullback here. Maybe you got in on the pullback here on the pin bar and are in profit already. If you are, fantastic. But again, watch for the triggers off the 20 MA to get back into the market. So that's pretty much it. I wanted to give you some methods of how I was trading it. I was trading it Aussie and Kiwi on the 1 hour time frame, mostly the last 4 days of last week. Tuesday, Wednesday, and Thursday, Friday, only trading on the 1 hour time frame. Looking for those breakout retests, getting my with trend moves, and then taking advantage of that. And so hopefully this makes sense from a price action order flow perspective, why these trends can do what they do, especially after the congestion. It builds up that pressure and then it has to get released. Once you see that release of the pressure, then start looking for what trend moves, either the inside bars, the shape bars, pullbacks at 20 MA, 6 NT moves, pin bars off the 20 MA, whatever's available. Look to keep trading with trend until the trend gets violated. So that's pretty much it. I hope you find this a valuable video from a price action perspective. Until then, I look for more questions on the forum. Good luck trading, everyone.